I recently got a comment on a past video where somebody was asking me if I still thought it was a good idea to invest in the stock market with all of the uncertainty, with the new administration and everything like that. And like I said before, I like to try to practice what I preach. And so that's what I'm going to be doing today in this video. I wanted to show you guys how I have been being hammered in the stock market. So I'm going to show you basically the numbers, what I'm looking at right now, how much of a hit I've taken, and then what I plan to do going forward. So if you're into that, please stay tuned because we will get right into it. I had a whole video in queue where I was going to show you guys how I have an overall gain of around 21 grand, almost 22 grand in the stock market since 2018 when I transferred all of my investments from Ally Invest to Charles Schwab and Fidelity. And before you knew it, the market fell. So my total invested number as of February 2025 was a little bit more than $130,000. And after everything's been said and done, I am sitting at $113,000 invested. That is how much I have lost. What's the math on that? About 18 grand loss, maybe. The only reason why it is still in the six figures is because of the sheer amount of money that I threw into the market during 2020's downturn. So I think if I hadn't stayed the course and dollar cost averaged so much, it would probably be in the five figures at the moment. So for my personal capital screenshot here, as you can see, I was at a comfy net worth of around $158,000, a little bit over that. And that has completely changed. As of today, I am sitting at $144,000 in net worth. Now, that's still a pretty good number, right? It's just the sheer amount being lost in such a short period of time. I just wanted to show you guys this because a lot of people like to show how well things are going. And I just want to show you that, even though I say, I'm going to keep investing in the stock market, we always say what comes naturally to us when the stock market is going up. And so I wanted to show you what it looks like when I take a hit as well. And I think my portfolio is a good example of a small portfolio, right? So it's a pretty realistic portfolio for someone in their early 30s. There are people that I know that I follow who have lost six figures in the stock market because they have, millionaire status. And I like to try to make myself feel better by saying you have to invest a lot in order to lose a lot. That's not always true, but for boring index fund investors like me, it's most likely the case. So let's look at some other more specific screenshots to show how we got here. In my Fidelity individual account, this account is my smallest account. It is a joint account with my husband. I was putting money in it at the end of 2024. It's kind of just a starter account. So right now in my account, we are sitting at $10,167 and some change. And I mean, that's not too bad, right? When you have a lower amount of capital, the loss is lower as well, which is a good thing because then you can get used to seeing these numbers fluctuate and you can work on that Murphy's Law muscle, if you will. And my individual account actually consists of two holdings right now. It's QQQM, which is about 30% of my holdings. And then the big 70% of my holdings is BOO, which is a total stock market index fund. And like I said, I like to be diversified by following the S&P 500 index. And one of the drawbacks of that is when the S&P 500 is down 13%, then your portfolio will be down 12%. So you follow the index up and you follow it down as well. Next is my retirement account. I didn't add a screenshot for this because I don't want to expose my company's name, but this account I think took kind of a bigger hit. It initially had a high of $56,148 and some change. And in the span of 2 months, we are now sitting at $47,748 and some change. And this is also following an S&P 500 index. But as you guys know, with employee retirement accounts, you don't have the same access to normal S&P 500 funds. So you find the closest thing to an S&P 500 index fund that you can. And so that's what I did. And it's pretty affordable. I think every share is sitting a little bit over $20, which means I have 2,000 shares, right? So if I lose 1 cent, then I lose 2,000 cents, right? So that's what we're working with here. That's why it went from almost 58,000 to 47,000. So a little under $11,000 lost there. And yeah, I'm just choosing to not really look at that account since there's really nothing I can do anyway, which puts me on the point of, I've mentioned this before, but you're going to see a lot of people on TikTok telling you to cash in your 401ks, to take it out. I mean, if you're not trying to retire in the next 6 months to a year or two, I wouldn't touch it. I wouldn't worry. If you plan to let that grow for a decade or more, please don't take it out. Please keep your 401k where it is. It is safe where it is. Don't take out a loan on your 401k because you will have to pay that back. So for my Charles Schwab account, I have $66,000 in there total, and that is split between my Roth IRA and my traditional IRA, my trad IRA. And that was the high as of February 20th. And today we are sitting at $56,338 and some change. So again, that was my biggest account, right? I've had it the longest. That was the majority of my Ally Invest holdings that I started when I was 24 years old. So in 2017, and it had my biggest holding in it as well, which is SWTSX, my favorite index fund of all, which is the Schwab Total Stock Market Index Fund, the S&P 500 fund. And at its high, that fund was at over $100. I think the highest it got to was maybe $102. I entered at $55, so huge gain, almost 10K, almost 12-ish K of gain. And now it is at $84 and some change. So you guys, I haven't seen this fund be under $90 in years. I don't think I've seen it be under $90 in at least 2 years. So I'm definitely looking at this fund as a dollar cost average. For my entire Fidelity account, so my employee 401k as well as my individual account that I share with my husband, the total value that I had in that account at its high in I think February or March was sitting at around $65,000, 174, and now it's sitting at $57,966. So we lost some money there as well. We lost some money. Yeah, we lost a lot of money. I think another thing that's kind of keeping me afloat with losing 5 figures is that I have a huge cash buffer. And I've really been battling with the thought of throwing half of it into the stock market so that when it does rebound, I can, benefit from that. But I think I'm not going to go in that direction, and I'll tell you why later in the video. So my gains for my Fidelity account that houses both of those, my employer 401k as well as my individual account, it went from over $10,000 of gain to $566 in gain. So yeah, that's about 3 years gone. When I moved my retirement account into my new employer account when we were acquired, all 3 years, all of that gain is now gone. I have $500 of it left. So that's where we're sitting at. The only bright side that I am seeing is that now when that money is taken out of my paycheck and put in, it's at a discount. So, I mean, that's a bright side. For those of you who have a small to a small, medium-sized account, just know that you're not alone. I'm sure your numbers are looking kind of like mine, unless you are selling puts, covered calls, stuff like that. I don't, and that's why I am kind of just a sitting duck out here a little bit. So in my Charles Schwab account, my total gains for the year to date went to $93, 566 plus 93. So that's where we're at right now. So what's next? What am I going to do with this information, right? My stocks, all the gain for the year especially has been wiped out. And we're at a crossroads, right? So there are some options here that I can take, right? I can take all my money out. I can save it in my high yield savings account. that'll guarantee me 4% on all of that money every month, but really it's not growing the way I would want it to. Now, some people would say, well, the stock market's not growing either, right? The stock market is tanking. And that's fair enough, touche. However, that would be timing the market. And I know for a fact that I will not succeed with that strategy. And so these are the two things that I'm going to be doing with the information that I have and that I've just shared with you. Number one, I am staying the course. So this means I'm not taking any money out of my investment accounts at all. And I'm also not going to be taking money out of my savings account and throwing a large amount into my investment accounts, which I am very tempted to do because I think both are pretty rash decisions, especially since, like I said, my industry is not the most stable at the moment. You never know where you are job wise, safety wise, right? And so I just want to be able to have a big cash runway in case I need it. Me and my husband have an agreement that we want a certain amount in our savings accounts each. And so that would also be somewhat of a betrayal to him, even though he is okay with it. He jokingly asks me if I've thrown my life savings into the stock market to take advantage all the time. And I'm not going to lie, I think about it all the time, especially at night. I think about it. I look at the numbers and I think about it. But I'm not going to do that. So what am I going to do? What does staying the course look like? I'm going to keep dollar cost averaging. My original plan was to save $866 a month in my savings account and to invest the rest. So that's $1,666 to invest every month. And I haven't really followed that plan because I, got a 3 paycheck month as well as a bonus. And so I've been just throwing money at my savings in order to reach 30K. But now that I'm at 30K, I am going to be throwing what's left into the stock market of my paychecks that come in real time, not my savings. So in order to be safe with this, I am going to throw $1,500 towards investments every month. And then the other 1,000 I am going to use for my sinking funds and my general savings. So I'm doing this because I don't know where the bottom will be. As you guys know, if you have been looking at the stock market today, it was an all right day in the beginning. It started out really strong. I don't know what happened in the news or what the president has said because I've been working all day, but I think it did end in the red, which is fine. I don't want to miss out on a red day to buy. But again, I don't know where the bottom will be, right? So that's why I will be just dollar cost averaging and investing $1,500 at the same time every month. And then it'll just be what it'll be. The second thing that I am doing is that I'm going to start a position in gold. And I know this might be a controversial decision, but I assure you that my position in gold won't be more than 5% total of my total individual account or even my total stock holdings period, right? You don't invest in gold for growth. It's more of a hedging position, and I feel like that would just give me a little bit more comfort and more liquidity than, like, say, a CD, right? But then more growth potential than a high yield savings account. And so that's what I'm going to be doing there. But most of my money still is going to be going towards VOO and QQQM. So that is what my portfolio is looking like. That is what my numbers are looking like. My gain is dwindling as we speak, and I feel completely fine with that. Maybe not completely fine, but there's nothing I can do. I'm not taking it out. I'm staying the course. And so to answer that person's question from my past video, do I think it's a good idea to invest in the stock market with the current uncertainty that we are facing? I cannot say yes or no to that because I can't give you financial advice. None of this, by the way, was financial advice. But what am I doing? I'm going to invest during the uncertainty. If there is a time where the stock market completely collapses and we have nothing left, we're going to have way bigger problems to deal with than our money, to be honest. We're not going to have time to even look at the stock market. And so that's what I tell myself. I'm going to do it. And I can only hope that, just like in 2020, I'll be looking back and saying that I'm glad I did it. So that is everything for this video today. Thank you guys so much for watching. Let me know in the comments how your guys' investments are doing. I know there are a few of you who told me before this crash happened that you were wary of investing, right? You didn't know when a good time was to invest. I'll tell you what, the Dow Jones and the S&P 500 has dropped thousands of points in the past week alone. So, I mean, if you're still doing your research, do your research. But I'm not sure how much further down the stock market is going to go. So, if you are just starting and you're wanting to get your feet wet, I mean, do your due diligence and do with that information what you will. But in the meantime, leave a comment down below, and I can't wait to discuss what you guys think of this one down there. And I will see you in my next video.